Markets with Scott Crothers and Stifel Nicholas. Scott Crothers, are you still standing after this week?
Still standing so far. So
Holy mackerel. Yesterday was another wild ride. Hopefully you had your seatbelt on. What was the story yesterday?
Yes. Yesterday the Dow was down 1,033 points, closed at 23,860, falling 4.15% for the day and down 10% from its high on January 26th. We are now officially in correction territory, defined as 10% or more drop from the high. A few days ago, and again yesterday, the yield on the 10-year U.S. Treasury passed 2.8%, and both times stocks sold off hard. Most analysts think we need the yield on the 10-year to go as high as about 3.5% before it starts to significantly affect the economy. So it's just kind of interesting how the market reacts whenever it starts seeing those interest rates go up on the 10-year.
Okay, so explain this to me, Scott Crothers. People are pulling money out of the market, but they're not putting it into 10-year bills? Or why is the stocks going down and the rates going up? I guess is that.
I know it's kind of crazy when that's happening at the same time.
Okay, so I'm not the only one asking that same question.
Yeah, I guess they're pulling out and putting it in cash, and they're not pulling out and putting it in 10 years. So.
Gotcha. Okay. All right. Now, what about investors pulling out all this money? What's going on there?
Yeah, no surprises the market sell-off, but investors pulled a record $23.9 billion from the stock funds last week. So that's not this week. ETFs saw the bulk of the outflows, losing $21 billion in outflows. Technology-focused investments were close to half of the outflows with $11 billion. The data is the weekend, February 7th, so we expect to see a lot more outflows after yesterday's sell-off. So.
All right, that's interesting. Now, what about the New York Times?
That's interesting. The New York Times said subscription revenue for their site passed $1 billion in revenue for 2017. This was the first time it crossed $1 billion. The subscriptions now account for 60% of all revenue. Total revenue rose 8% to $1.7 billion. They now have 2.6 million digital-only subscribers, which includes access to news, cooking, and crossword products.
Shocking. New York Times doing well because they're charging for their product.
Because they're charging for their product and they're charging for their online product.
Right, right, yeah. Shocking how that works. Imagine you produce something and then you charge somebody for it. It's a new concept here in America. Speaking of destructors, what about Amazon? What are we hearing from them?
Now, Amazon is launching a new business delivery service that will compete with UPS and FedEx. It is called SWA, or Shipping with Amazon, and will pick up packages at businesses and ship to customers. They will start in Los Angeles, and they roll it out to other cities. In the past few years, Amazon got into ocean freight and leased 40 aircraft, as well as opened an air cargo hub in preparation for this new service.
That's interesting, because if they roll it out in Los Angeles, but let's say the package has to go to New York.
Well, I guess they're shipping from Los Angeles to wherever. So.
Right. Yeah. I hear you, but I mean, it's just anywhere in Los Angeles or anywhere across the country.
I would think that anywhere across the country.
Right.
I don't think they could just have delivery service that just does Los Angeles. But
Right.
but I don't know. So.
Yeah. All right. All right. How do the futures look today?
Well, it looks like we're going to have another volatile day at the end of the week. We are looking up about 100 points now, but we were up 250 points earlier this morning on the futures. Hopefully things will start to settle down, but today is not that day, so we're going to be a little crazy today, it looks like.
All right, put the batteries in your monitors there, Scott Crothers, and watch it all for us and tell us all about it on Monday. Have a good weekend. Thanks.
Hey, you do the same thing.